As the global death toll due to coronavirus crosses 3,000, India confirms its 28 cases. All international flights coming into the country will be screened for the virus. Experts expect a coronavirus vaccine in the next 1 to 1.5 years. And if you look at the 28 cases that have been reported in India, 1 case has been reported in Delhi, 17 in Rajasthan, 3 cases in Kerala. And the good news is all the 3 cases, all of them have recovered and the patients are discharged. 6 more cases reported in the state of Uttar Pradesh and 1 case in the state of Telangana. Hello and welcome. You're watching Countdown. I'm Navneet Saluja D'Souza. Here are the day's other headlines. Indian equities trade at the day's low after fresh cases of coronavirus emerged. The Sensex sheds over 600 points while the Nifty falls below the 11,200 mark. Global markets continue to be hit by the speed of the virus. Stocks in Asia struggle to hold on to the gains, while European equities get a lift from the Fed's surprise rate cut. Relief for cryptocurrency players. The Supreme Court sets aside the RBI's 2018 circular that stopped banks and other financial institutions from dealing with cryptocurrencies. Good afternoon, Neeraj. Once again, it's not looking a great session after yesterday's positive closing. We're back in the red, 11,150 for Nifty.
Yeah, and the heavyweight financials are leading this charge downwards, unfortunately. Good afternoon, Ramneet, and good afternoon, viewers. It's the Bank Nifty which is the key culprit. Around 832 points lower, was 1,000 points lower at a point of time. And I mean, the market breadth should be negative around the broader markets as well. You don't need me to tell you that it will be negative, and it's actually at the worst point of the day, about 1:5 in favor of the declines, more than 1:5 in favor of the decliners. Get the heat map and you will see that the likes of HDFC Bank, Bajaj Finance, etc. are putting pressure, and as a result of which the Bank Nifty is looking very, very wobbly. Yes Bank, by the way, is down another 7.5%, but look at this, the pain point is here. You have heavyweights impacting sentiment as well. Bajaj Finance down 4.5%, HDFC Bank is down about 3.5%, and then SBI continues its drag lower, so that is weakness there. There is weakness in iShares Motors, Tata Motors, so globally linked names. Tata Motors was down about 7.5% somewhere midway through trade. Stocks like Reliance and ICICI Bank too have corrected. Essentially, a lot of losers. The sentiment is probably a lot more weaker than what the screen is showing, because you could look at the Nifty being down 1.5% and think this could be any other day. But it's just the weakness in the Bank Nifty and how some of the fancied names, which are the last hiding places, are getting punished today, which is why the sentiment is a lot more weaker. Just odd, some pharma names which are in the green and IT is holding out, but you would expect that on a day like this. So exporters doing well, Devina, but banks clearly taking it on the chin. Good afternoon.
Good afternoon, Neeraj, and like you highlighted, the breadth of the market is also negative this afternoon. While we've been seeing a lot of global pressure building up, the broader market space is down with troubles of its own, down about 2.5% across the board. Individual stocks are in focus there as well. Starting off first with some of the bigger losers from the Nifty mid-cap index, and the MRR function will show you the individual stocks that have lost out in the session. But across the board, there is weakness. So if you take a look at most of the stocks, Neeraj, which have done even well up until now, have seen those stocks like Deepak Nitrite that have fallen now 5% in today's session. IRCTC, a stock that was so revered, is down 10%, lower circuit on the counter. So these kind of stocks, obviously, no one really factored in when we were talking about SpiceJet and Indigo and the kind of pressures that these stocks would see because of tourism. IRCTC, local travel, train travel, that is also something that you need to keep in mind, and that's something probably that has dawned upon the markets in today's session, and that stock's taken a beating of about 10.5%. Aside from that, a whole host of other names. Avenue Supermarts today is down closer to about 2.5%. We'll come to that in a bit, but the banks have taken it to the chin. What's done well is Ajanta Pharma, which is, this is a year-to-date performance. We'll get you a daily performance of the same. But nonetheless, today's session has got a weakness coming in throughout banks, be it your PSU names, be it your private sector banks, everything is down and out. But I guess it's more important to see what's happening in the futures and options space. Nami is going to join us and give us a quick update of that. Nami, good afternoon.
Good afternoon, Devina. Well, the traders who would have created short positions when the markets opened in the positive in the morning would be sitting with good amount of profit. profit. So clearly, this remains, a market for short traders as of now. Nifty is at 11,150. We've been highlighting the range will be 11,000 on the downside. Just to highlight, day before yesterday, our low was 11,030. So that should be your first support on the downside if we were to correct further. We're in the discount, 12% higher, telling you there are fresh short positions which are being taken. And this could, by the way, also be a function of people who would have taken long positions yesterday would have covered their position today. Nifty Bank is down about 800 points. So clear underperformance seen there. Volatility is back in action. Remember, we've been discussing some of the reports have stated that markets will bottom out when India VIX touches the mark of 30. Let's see whether that happens or not. But for the time being, India VIX is still at elevated levels. Options data, surprisingly, we're trading below the mark of 11,200. We've breached that mark, but 11,200 strike is still added about 10 lakh shares. Of course, there is intraday unwinding which has taken place, but still there is 10 lakh fresh addition which is there. And of course, put writing continues at 11,000, 11,100 mark. Let's see if the bulls can defend these levels or not. Very quickly then, stock futures, we've been highlighting how travel takes a hit. So Interglobe Aviation, I want to pull up first. Okay, let's address PVR. So people will be avoiding crowded places, we know by now. So Interglobe Aviation continues as fresh short positions. PVR on the other hand, which is down 22% by the way from its peak, which was just seen in the month of February, remember, and the futures are trading at a discount. Fresh shorting has come in for this one. While for Interglobe Aviation, this stock is corrected nearly 21% just in last 9 sessions. So fresh shorting seen here, spots down 4%. And the only sigh of relief today can be the Pharma pack, as you've got a couple of stocks which are in green, and one out of that is Dr. Reddy's, which is trading above the 50 DMA, and the futures have been indicating long positions here as the open interest has surged about 12-13%.
All right, let's get straight into the market then. And Shrikant Chauhan, Senior Vice President Technical Research at Kotak Securities, is joining us right now, along with Hemant Chopra, CMT, Head Research Equities, India Bulls Ventures, is here with us too. Gentlemen, good afternoon to both of you. Another day of weakness, and this is something that most of you had predicted, that you will get those bounces, those dead cat bounces, but the structure of the market is extremely weak. However, post today, will you sell further? Manav, I'll come to you first.
See, looking at the structure for the markets, I don't see any risk reward, at least on the index front, whereby we could see much more downside. I believe markets have already witnessed a good amount of decline, and on the weekly, monthly are nearing to its important support cluster. So 28,000, 1 or 2% either side are the important supports for the Bank Nifty, and for the Nifty, I see it somewhere close to 11,000 levels. Also looking at the other VIX and the charts, I sense, for the near-term perspective, the markets are at the oversold levels, and the global markets too are at the oversold zone. So for a very short-term perspective, I sense there is no good risk reward, at least taking a short-term trades, at least on the lower side. But given a choice, if the markets hold on to the today's lows, and we see this support being held for next couple of trading sessions, will not rule out a possibility for a bounce from the current levels, at least for a good short-term rally on the upside.
Shrikant, what about you? How are you approaching trade?
Yeah, good afternoon. See, the market has not respected any important support levels. We were of the view that 11,350, 400 should act as very good support for the market. But yesterday also, when there was rally in the market, and today when it opened higher, it failed to sustain above the mark of 11,350, which is 61.8% retracement of the entire up move, which has started from the levels of 10,630. So we are of the view that now the market is completely into different range, in another range. It is now following to the range of 11,350 on the higher side and 10,950 on the downside. And right now we are trading in between. So today, in case if we see the market is closing below the mark of 11,150, which was yesterday's lowest level, then furthermore weakness is not ruled out up to 10,950 or 10,970. So the strategy should be to look for creating some short position if we see the market is closing below the lowest level of yesterday.
All right, and if you were to in fact look at the Nifty index itself and the move that it has seen since September 26th, I think September 26th was when the corporate tax cuts were announced, and that big chart, a big bar, that big uptick that brought all the bulls back into the market. we're almost eating up into those profits already. We're already halfway down from those levels, more than halfway down from the peak. So from 12,400 now down to 11,130, that's a considerable cut that we're seeing. But if things were to go this way, we would probably engulf the entire profits that we got on the corporate tax cut day. But let's talk about individual stocks as well. And I'm going to keep it with you, Srikanth. Firstly, what are the stocks that you're going to be recommending this afternoon?
See, right now there are like number of stocks which are forming some lower highs and they are falling fresh. For example, Shriram Transport Finance and Escorts Limited. Shriram Transport has already broken its important support area and it is now down by some 4-5%. So it is better to create some short positions on Escorts, which is trading around 813-814 levels. We should look for creating short positions even at current levels with a target of close to 790 on the downside. And we can keep stop loss at 827 on the high side. On the other side, because the currency is heading towards 74, which was its previous lowest level, we are of the view that technology stocks should do well because most of them have fallen to their important support areas. Like TCS, it is holding above the level of 2000 since last almost 1 year, 2 years. So based on the overall its range formation, I think TCS looks very strong bet to buy, to add at current levels. We can again expect one rebound in the near term. We can keep stop loss at 2025 for the same, and we can again expect close to 2100, 2125 on the high side. So TCS is a buy, Escorts is a sale at current level.
Okay, Manav, your stock ideas?
So I have two calls. My first call would be a buy on DMart. In fact, this is one stock which has witnessed a corrective decline in this kind of a panic market. So we haven't seen the stock breach important weekly, monthly support levels. In fact, there has been a corrective phase of a decline that the stock has witnessed. The recent fall has not also seen a good amount of volume. So the overall structure is still intact for the stock. In fact, we have already seen the stock see a good amount of rally. So at the current zone, it also has important Fibonacci support levels at the levels of 2120 to 2150 zone. So I recommend one can maintain a buy on dips approach with a stop loss at 2100 on the low side, and eventually for a near term to medium term perspective, if the market stabilizes, we can expect the prices to rally towards 2400, which is my target price. My second call would be a sell on Ashok Leyland. In fact, this is one stock from the auto packs which has shown a good weak structure. In fact, there was a good amount of rally that the stock witnessed in the month of September from the levels of 58 towards the levels of 86, and that rally was more or less corrective in nature. So the kind of a decline that we've witnessed into this stock in last couple of weeks confirms that the overall downtrend structure continues, and the prices would eventually in the next couple of weeks would retest its September 2019 lows. So keeping that structure in play, recommend a sell into this with a stop loss of 75 for lower targets of 65.
Okay. Well, those are a few names, and you got to keep an eye out for some of these. Strong stocks are looking weak. Some of the weaker names are being bought into as well. So it's a bit of a mixed bag. And Maidev, I must say that the banks have bounced back a little bit. So we were down about 1,000 points. We are now down 700. So there's a bit of a pullback. Let's see if this lasts. You've got to keep in mind that the Dow futures are in the green. A lot of these stocks off day's lows today, the likes of SBI, PNB, etc. So there's a bit of a pullback into them, even though they are in the red. And mind you, as I said, the world markets are trading well. So I don't know if that gives a bit of a support or not. Avinash Goroshekar, Director Research at Profit Mart Securities, joins us on the show. Avinash, what would you be doing if by chance you were sitting on some cash? Would you deploy that cash or would you wait for some lower levels?
I think, Neeraj, clearly, one would be selective, because I think in this market, clearly from a near-term perspective, markets are definitely going to be extremely volatile. But I would believe that, there are some sectors which are pretty resistant, which are pretty solid in terms of demand. Specifically, if you were to talk about, domestic consumer discretionary sectors like paints, or for that reason, even, specialty chemicals, because this is one space where our sense is that, over the next 1 or 2 quarters, you're going to see a very strong shift on the operating profitability side. I think some noticeable names in the specialty chemical basket which we like would be Sudarshan Chemicals and Atul. Our sense is that, despite the fact that the market direction is definitely going nowhere, and we could see little negative surprises on the broad index, typically these are companies where earnings growth trajectory would definitely begin after a couple of quarters. So maybe the April to June quarter could be a little challenging considering the overall macro environment, but overall I would believe that there could be some good opportunities for investors who want to take a call now, because clearly the markets have corrected significantly, and this could be a good time to actually start a little bit of nimbling, maybe not the entire cash kitty, but at least 15 to 20% allocation at this time could definitely yield a decent risk reward once the coronavirus is out. I think once the coronavirus vaccine is out, I think the rebound will be equally sharper.
But that's going to take some time, Avinash.
No, but that question mark, Devina, is going to be there for all. I think, it's the panic which is more damaging. So I think clearly, now with India, reporting some sort of, cases of the coronavirus, I think there's a pretty big scare that the numbers could increase dramatically.
Yeah.
But I think clearly, we have lived with several viruses in the past, and I don't think, over the next 6 to 12 months you could live with this. So, obviously you need to be a little positive now, which is a little
and this is any which way is a time-bound event. Once the summer's come into the full force,
exactly.
Most are expecting this to peak out. Even Chris Wood of Jefferies has spoken about that. But aside from that, so if you look at it in light of that, or the disruption that you're seeing in PVR, Inox, if somebody wanted to buy at about 370, 380 a few months ago, 2 quarters ago,
exactly.
It's back at the price. It went up to 510, 520. From there, it's back to 385. Would this be a chance and an opportunity to get back into the counter?
No, I think both PVR as well as Inox, I think if you have a longer term view on the business, definitely these are businesses which are very difficult to replicate, and I think valuations have definitely come off significantly. But I think clearly one has to be ready for the volatility, because, depending on how the coronavirus numbers come out, there is a scare that possibly, these kind of consumer discretionary kind of sectors could be the first hit sectors, especially after cinema houses, multiplex, it could be restaurants or it could be big malls. So I think, typically the valuations which these companies enjoy, it could possibly further go down. But yes, from a longer term perspective, Devina, I think any fall has to be looked upon from a longer term perspective. In the short term, there could be continuous negative surprise on the stock price.
Okay, and we've seen that negative surprise, by the way. The stock's down 5%. In fact, CLSA came out with a report and they've maintained their rating of buy. Their target price is about 23.50. And of course, most of the brokerages have been saying the synergies with the benefits that they've been getting after the acquisition of SBI has been working well. And the revenues that they get from SBI is almost 1/3 for the company. Pull up the Nifty IT index. I think that's in the green. There is some recovery which is coming for the large cap IT players right now. So it was in the red right now, just about trading marginally positive. Pull up TCS, Infosys, Wipro. All these stocks have recovered from the lower levels. And remember, TCS and Infosys are your heavyweights on the index. Of course, we're still down, by the way, 150 points in trade, but these two stocks are clearly providing some bit of support to the market. Avinash, yesterday there was a stellar rally in the last half an hour or 45 minutes in something like Tata LXC2 that went up. Do you take refuge to any of these? I'll stick to large cap here because they are considered to be safe havens. Would you take refuge to ID stocks in this environment?
I think again, Navneet, as far as IT is concerned, I think one has to be a little selective. I think TCS, Infosys definitely look safe at this point of time. But I think clearly from a positional perspective, I would believe that clearly in the near term these could be defensive bets, and probably if one were to look at the fact that you want to save your capital and restrict the kind of growth potential, then these could be defensive bets at best. I would not be surprised that there could be a runaway rally in these companies. But yes, to a large extent, dividends as well as the kind of cash flows these companies generate, they are much better insulated in the current scenario.
Yes, and one more, I think, tailwind which is going in their favor is the rupee depreciation that we've seen of late in the recent past. We were talking about specialty chemicals. Pull up BASF, of course, that's an MNC which is up about 11 to 11.5% gains coming in for this one. This company is too into specialty chemicals, 11.5% gains for this one. And the other pack, Avinash, from the defensive side, which is holding up today, is the Pharma pack. Nifty Pharma is still in the green. We've seen a lot of stocks doing well. Sun Pharma of course, had its news promoters bought
Yeah.
from market yesterday. But what did you make of yesterday's news where government has restricted, I think they've not banned, they've restricted export of certain APIs and formulations. How do you see that panning out for the Indian pharma players?
No, I think definitely a little, it dampens the spirit because there are many API companies which used to export to the US markets, and I think that would definitely curtail, incremental exports going out there. But I think clearly, from a domestic perspective also, APIs are going to be in a pretty big shortage. So I think obviously, as a space, I think pharma companies which are into bulk drugs and typically which make the inputs are definitely going to see margin improvements coming in. Overall, I would believe that this measure is definitely going to curtail companies which have got a large exposure, to the export markets. Companies which are traditionally exporting, specific bulk drugs to only the US and the European market. So I think, companies like IOL Chemicals or typically, some other bulk drug manufacturers could definitely now be looking at limited number of, exports, considering that now there is a kind of a regulation from the government side.
Okay. Look at almost everything that is related to travel. I know we mentioned this by virtue of mentioning IRCTC, but SpiceJet with the current fall, if I'm not wrong, is trading at the lowest level since 1999. And that tells you how severe the last 6 months have been for SpiceJet. There were issues of its own, and now the coronavirus scare gets added to that. So do watch out for that. And then Lemon Tree, have some data out here. It's trading at all-time lows as well. It's down for the 7th straight day, down about 7.5% down for the 7th straight day. The last 7 sessions, it's corrected about 27%. Has Lemon Tree, and there's a market cap erosion of 1,300 crores on a base of 3,600 crores. That tells you the extent of selling, and it's now trading below the IPO price as well. At some point of time, these stocks could recover. The question is, will they recover right now? Avinash, my final question really to you is about this. Do you reckon that you would buy into some of these businesses which are seeing this blip right now? We can't extrapolate how long this will last, but
I think, Neeraj, maybe for another 1 or 2 quarters, the markets are definitely going to see, earnings getting hit significantly, especially airlines and hotel companies. But I think if you take out the next 1 or 2 quarters, I would believe that once the virus issue is off, definitely there could be significant recovery for both these sectors. And I don't think, companies like Lemon Tree had a problem of inflow of, tourist arrivals. I think as long as the scare from the virus is out, then you could possibly see resumption of business, but that could definitely take at least 1 or 2 quarters before we could see any resumption. But till that time, I think clearly it's going to be in panic mode.
India Cements, just pull up that stock, way below the price of the entry of the Damani brothers. 88 now. I think they entered somewhere closer to 100 and 104 thereabouts, and the stock now at 88. It's down.
in the IPL effect, maybe.
Yeah.
Let's see. We don't quite know if the cancellation will happen or no, but if indeed that would be something that could be. Sorry,
I think it now looks very certain that IPL looks to be a little difficult now.
If that happens, Avinash, what happens to Jubilant FoodWorks? It derives a lot of its revenue from...
I think it's going to be definitely disastrous because, as you said rightly, a lot of sales happen during IPL time. And I think now it looks very tough looking at the fact that, with this virus looking uncontrollable, at least in the near term. I think IPL is completely off.
Any idea about whether it's Pepsi or Coke which supplies to IPL? Because I think Varun Beverages as a company could be impacted if it's Pepsi, because that would be a spike in sales. So I don't know if it's Pepsi or Coke which supplies to IPL. That's the only point out here. But anyway, since so many stocks are moving around,
Can I highlight one stock?
Sorry? Yeah.
There is one company, 3M India, we know about it. So they make masks, by the way, and there are rumors that prices of masks has been going up, and the stock's up about 6%. So one of those few stocks which are still holding up in green. I don't know if that's a logic, but yes, they are making masks, and people are buying the masks which are being made by them, at least in India as well. And they've issued a press release globally where they've said they're ramping up production of these masks.
Yeah, though I just want to, and you're right, Navneet, they do, but I just want to pull up a 6-month chart of 3M India, because I must say, when the first signs of coronavirus started coming around, 3M India spiked a lot. As you can see, month of February, it's really taken a big downtake. So it went up all the way from 27,000 and then came off as well. So just please be very careful if you're trading this stock on the back of that, because it's done this in the past and then come off quite rapidly as well. But the problem today has been what's happened to two eminent financial names. And Manav, And Shrikant, I want you to dwell on one of each. Manav, to you, I'll come on HDFC Bank, and Shrikant, then I would want to dwell on Bajaj Finance because that's the other one which is corrected. But Manav, HDFC Bank has looked very weak. It was probably taking support but has gotten beaten down again today. But what do the charts indicate?
Yes, I think the stock has seen a good amount of profit booking, and since last couple of trading sessions, the stock was managing to hold its important support of 1150, 1180, and since the prices breached its support of 1185, there has been a good amount of decline. For the short-term perspective, I don't see much of a downside, at least in HDFC. On the immediate basis, it's near to its important crucial support zone of 1125, 1130 band. So if I have to take a short-term view, there will be good amount of selling pressure. The stock will take some time to at least bottom out, but I think for a medium-term perspective, if somebody wants to buy HDFC Bank, I think this is a good time. Looking for a near-term perspective, the risk-reward ratio is quite favorable. One can place a stop loss at 1100 levels on the lower side.
Okay, and Shrikant, what about Bajaj Finance?
I think, see, Bajaj Finance is falling, but it is correcting to its previous up move, which it has started from the levels of almost 4,000 to the levels of 4,900 or 950. So after that, we are seeing some vertical sell-off, and it is happening mainly because of it's a part of Nifty and contributing a lot. So it is just falling on the back of that because the volumes are on the higher side on daily basis. That means someone is selling, someone is buying, and currently the stock is down by almost 15% from its immediate highest level. So I am of the view that if there is any further more fall because of any reason, then close to 4200, 4150, certainly it's a very strong bet to buy and to hold for next few days, because in the short term we are expecting whenever the market will rebound, the stock will rebound heavily as compared to other stock. So it's a buy, but buy on dips. If there is a medium to long term view, then even at this price also one should look for adding positions on Bajaj Finance.
We'll get in Yash Upadhyay from our team as well to talk about some other stocks, but Avinash, just one very quick thought. Are you looking at any of the auto ancillaries, the likes of Motherson Sumi, Bharat Forge, etc.? All of them have beaten black and blue.
No, I think, Neeraj, as of now, I wouldn't be surprised that not only the March quarter, but even the June quarter could be a little challenging for most of the auto, ancillary companies, especially companies which cater to the commercial vehicle and to the passenger car kind of players. So I think you are going to see stagnation in volumes. Margins are going to come off, and I would not be surprised that possibly, typically if the frontline OEMs, don't grow, then I think you're going to see a deceleration in the volumes for the auto component companies also. And I think companies which are into the export markets would be specifically impacted. Like today, I think some news reports came about Class 8 trucks down by about 16-18%. So I think that would definitely impact, companies like Bharat Forge. So I think it's better to stay put for some time. Probably, some further lower levels on the auto component side could be coming. So I won't be surprised that you could possibly see levels coming down. And at that point of time, maybe some value buying could be coming in maybe the frontline auto companies like a Bharat Forge or a Sundaram Fasteners. I think, but still value has definitely not emerged.
All right, I want to come back to the question that I was originally going to ask you, and that was on India Cements. What would you do with that stock now and the other cement stocks as a pack?
No, I think cement as a pack definitely is the least sector which could get impacted by the coronavirus. So I would believe that, India Cements had a different reason for going up. But if you look at the space, I would believe the South companies, especially, Ramco Cements or a larger player like Ultratech Cement, definitely volume growth should improve. And I would not be surprised that looking at the kind of infrastructure spends, announced by the government in the budget, government spending is going to drive cement volume. So I would believe that, lower level should actually be a good opportunity for investors looking for a longer kind of a positional hold in their portfolios. But specifically India Cements, Devina, is a more of a momentum play. I would believe that, still the financials don't look all that attractive, and I think it went up purely because of Mr. Damani buying in there. But I think now looking at the overall sentiment, it's better to stay away. I think larger players like Ultratech or Ramco Cement could definitely outshine India Cements, at least in the near term.
Okay, just a few chart checks then. Godrej Properties for one, if you can have that on your screens, 973. The stock, I think, has been down for 10 or 11 straight days now. and from levels of closer to 1200. I think 1150 odd it had gone. That was the highs. And then from there, the stock has just been on a downward grind. Shrikant, does this stock look like it could see a bounce just on the fact that it has been sold a whole lot?
You're talking about which stock?
Godrej Properties.
Godrej Properties. Okay. See, like for Godrej Properties, see, it's a the stock has given spectacular return in last 2 years or 3 years of performance. If we see, then the stock has given decent performance as compared to other real estate stocks. And now when it is coming into the basket of FNO, then I'm very much sure that the buying should emerge. At the same time, whatever is happening, it's a corrective fall that we are seeing on the chart. And currently the stock has corrected to its important support area of 960, 950. So it's a buy at this price, but buy with a positional view, because now the markets are falling because of some news flow which is very difficult to predict. But it's a buy at this price because the stock was around 1200 levels and it has corrected to almost 60% of its entire up move. So it's a buy, but buy with a stop loss at 940 on the downside.
Okay, that's Godrej Properties. It enters FNO market, I think from April series, but only there's a condition, I think, which has been given by the exchanges. If it has to meet the eligibility criteria of quarter sigma computation cycle by March 2020. It's quite surprising. We've never seen any entrant in the past into the derivative space with any caveat or condition being placed there. That's Godrej Properties down about 2.5%. But the other company from the same group, Godrej Consumer, by the way, has been little resilient, I'll say, today. It's up for the third straight session, so still holding on. It did slip into the red, but it's recovered from those lower levels. Manav, how are you reading into the charts of Godrej Consumer? This week itself, I think it has stayed resilient and it has given positive returns in the last 3 sessions.
True. In fact, the prices did test its important monthly support levels of 550, 560 levels, and since then there has been a good amount of a rally into the stock. Importantly, there has been good volumes that the stock has witnessed. There has been a good breakout, at least on the daily chart on a short-term perspective, as the prices are breaking above its short-term averages. I sense, at least in the near term, looking at the scenario, there is a short-term bottom which has been formed. We can expect a mean reversion rally, at least towards its long-term averages, which are placed close to the levels of 660, 670 band. So for a short-term perspective, we do see more upside, at least for 5% at the current levels. One can maintain a stop loss of 605 on the lower side.
Okay, that's a Godrej Consumer for you, sitting with some bit of gain. Just want to highlight few. We've recovered, by the way, a lot. We're back above the mark of 11,200, 11,228. Remember, we highlighted there was still no unwinding coming up for the 11,200 call, which had added about 10 lakh shares so far. So Cipla, Dr. Reddy, Sun Pharma, top 3 nifty gainers are all your pharma stocks. Asian Paints has been holding up in today's session, and some recovery has come in large cap ID companies. TCS, Infosys are also sitting with some bit of gains. The other stocks, Gale is up 3%. You've got Power Grid also. These are all your laggards, by the way. We don't know whether it's a dead cat bounce at last or not, but I want to pull up Shriram Transport. It's pretty weak. It's down about 7%. It's also a top F&O loser for the day. If possible, pull up the futures. We'll get an idea if there are fresh shots being taken on this stock or not. Shriram Transport down, spots down 7%, and yes, there is fresh shorting. Open interest is up 20%. Any thoughts here, Avinash? Shriram Transport?
I think looking at the kind of trend in the commercial vehicle sector and the second-hand commercial vehicle market, Navneet, I won't be surprised that the Jan to March quarter, which is traditionally a very robust quarter for most of the automobile companies, is going to be a very dry and a negative quarter. And hopefully, if the scrappage policy also doesn't come in, then you're not going to see a very incremental demand coming in for most of the commercial vehicle players as well as for the CV financiers. So I would believe that this kind of move which has come in is largely on the fact that there are some ground reports that possibly there could be some asset quality issues also, because clearly in the second-hand market, a lot of these vehicles get financed by banks, both from the private and the public sector banks. So I think incrementally, I think there are going to be a lot of asset quality issues for Shriram Transport, and possibly we could see that coming in possibly in the March or maybe the June quarter.
Okay. Well, watch out. I think niche businesses aren't quite exactly getting the premiums. Delta Corp is now down 5.5 to 6%, 124. But like I said, we've spoken large caps. We're also speaking mid caps. We're also speaking large caps and the kind of moves that some of these globally exposed stocks are doing. China, Tata Motors, for example, is down about 3.5% because the Chinese auto sales registered a degrowth of 80%. The month gone by. The data has come out, and that's the sharpest drop ever. And that's why I said not surprising that some of the firms are taking a hit. Yash is here with more on it. Yash.
Good afternoon, Neeraj. So, as you rightly put, the Chinese retail sales for the month of February came earlier in the day, and we saw an 80% drop year-on-year for the month of February, which is the highest drop in retail sales that they have reported on record. Now, what this means is for the two companies, that is Tata Motors and Motherson Sumi in specific, is that it is negatively impacted because nearly 11% of Tata Motors' revenues, they come from China on account of exports of its JLR car, as well as Motherson Sumi, which gets about 6% of its consolidated revenues from China. Now, MK in a recent report had done a sensitivity analysis, and they say that if demand is impacted by about 25%, then we could see about a 3% hit on its earnings for the first quarter of FY21 when it comes to Tata Motors, and about 2% for Motherson Sumi. But that apart, we've had some commentary come in from these companies when they reported their February sales numbers. And I'll start first with M&M. Now, they have said that because of the coronavirus outbreak in China, that would impact the supply of certain parts from the country, and as a result of which they have seen a drop in billing volume for the month of February, as well as the dealer inventory has fallen now under 10 days. Going into March, they anticipate the challenge on parts supply to continue for another few weeks before reaching to any normalcy. Tata Motors too had highlighted the similar concerns with respect to the supply chain disruption. TVS Motors, before announcing their February numbers, had said that because of the coronavirus outbreak, their February production was any which ways lower by about 10%. So up until now, while we've had trouble with respect to the demand being extremely low and dealers finding it difficult to sell cars, from my interaction with some of the channel partners, and not necessarily just these companies, but some of the newer entrants like MG Hector as well as Kia, well, they have been sitting idle at their dealerships because they haven't received any cars from the OEMs, and this is a big issue going forward.
All right. Yash, thanks very much for that. So watch out for those names. Motherson Sumi, any which ways, has been damaged the most in this selling route that we've seen. The stock's at 100 rupees right now, the lowest point of the day. Nevertheless, the market sentiment has improved a bit. We've actually come off the lows of the day for the Nifty, now down just about 0.5%, down closer to 1.5% at one point. And for the Bank Nifty as well, there has been a pickup. So from levels of about 3.2% under, the Nifty Bank is sub 2% now. So 28,614. There has been a recovery in few of the larger names. The quantum of cuts have reduced a bit. So that seems to be supporting the index this time around, and so is the Nifty 50. But let's bring in Yogesh Mehta, founder at Yield Maximizers, joining us right now on the show. Yogesh, a quick word from you. Yet again, some selling pressure building up in the system, but nonetheless, conversations all pointing towards, having a list of stocks that you want to invest in, and once they come to the price that appeals to you and the valuation that appeals to you, make that investment. Is that something that you go by?
Yeah, Devina, good afternoon. Definitely, yes, because the carnage we have seen in the market, and we have spoken about this in last Wednesday as well. I think now this provides a very good opportunity for those who are investors who are waiting for a sidelines and they are now ready to deploy. They should start accumulating quality stocks and reasonable valuation as well. So market selling. Initially, when it was a fear in China, Corona, there was no fear here in India, and now the China is subsiding, but India is now getting aggravated. So I think this is a right combination of getting into equities this time, and not to jump into the bandwagon with 100% allocation. At least start with 50% right now and 50% over a course of time, because we are still much ahead of 10,630, which was in October pre-corporate tax rate cut days. And on the valuation front, we have seen all the growth-oriented stock and now all the ETFs and foreigners are selling the liquid names more into quality names. So this is the time now one has to look at those stocks which have corrected and the value. So in that context, I will say auto, which was running behind this the entire rally. Now I think it will be a defensive one in this Corona. Even last Wednesday we have spoken about the Sun Pharma and all the pharma sector, which is now performing ahead of due to this coronavirus. So I think one should be very selectively, and they should do their homework and get into the equities at the right time, not to look at the corona numbers, how aggravated it's going through. And these are the phenomena of the market and will remain there forever.
Yep, it's the aftermath and the after effect of coronavirus that one is more worried about, Yogesh. Avinash, before we let you go, any particular stock that you fancy right now?
No, I think from the specialty chemical space, we like a company called Sudarshan Chemicals. They are a large player in the pigment space, Devina, and I think a lot of pigment capacity in China has got completely shut down. So our sense is that the company on an operational basis has been doing pretty well, but looking at the kind of shortages in China and the kind of global headwinds, our sense is that this company should do very well in the coming year. Currently, trading at around 450, 460. Our sense is that over the next, say, 12 to 18 months, one could expect a decent risk reward. And I think this is a company where possibly it's more of a delivery and a positional bet rather than a momentum bet. So I think it could stay volatile, but definitely good value could come in over the next 12, 18 months.
Okay, we leave it at that, Avinash. Thank you very much for joining in. All right, back to some chart checks. We took a check on Godrej Properties and the fall that the stock had seen. Another one that's seen a similar fall is Relaxo Footwear, and we've been getting quite a lot of requests actually to figure out what's happening in that stock. So let me just get on to a quick chart check. Shrikant, Relaxo at 691, is it a good buy?
You're talking about Reliance Industries?
Relaxo Footwear. Relaxo Footwear.
Relaxo. Okay. See, for Relaxo, I think here also the formation is equally similar because it was trending when the market was going up, and now the stock has corrected from the highs of almost 800 to almost 700. So it's a buy at these price, but again the view is same because number of good companies which have shown some spectacular rally like IRCTC and all, they have went to extreme levels and now they are correcting, like even DMart also. So these are the companies which one can buy in parts and hold on to them because they are certainly going to rebound at least in the short term. So it's a buy, it's a decent buy at these price. We can keep stop loss at 660 for the same. And if there is a medium to long term view, then buy at these price, add more on declines. That should be the strategy.
Okay, that's Relaxo Industries. Pull up Dabur. Surprisingly, this one's not fallen with markets in the last 7 to 8 sessions. It's sitting with gains of 1.5%. By the way, all-time high levels are 523, which it touched last month in the month of February, and it's just at about 515. So no correction seen for Dabur. In fact, last 7 days when the markets have seen a sharper correction, the stock's up about 3%. So some bit of outperformance seen from this FMCG player. Manav, come in here on the charts. If somebody's still sitting with some position in Dabur, or maybe not, would you suggest to take a fresh call at these levels of 514, 515?
Yes, in fact, the prices after a good consolidation, it has seen a good amount of breakout today on the daily charts, and this is the only stock which has formed a series of higher bottoms and now is closing above its trading range. So, the outperforming stocks will continue to do well when the market stabilizes, and we have seen the stock also trading above its short-term averages. The overall scenario looks quite well placed. On the lower side, 505 can be the stop loss, and we can expect an upside target of 545.
Okay. Well, that's the view on Dabur India today. Some of these financial-led names and some of the high-flying names like IRCTC, etc., have come off. Yogesh, you've been a bull on IRCTC, 10% lower today, 1565. Difficult call, of course, but what would you do if you were in the stock? Would you add on to positions or would you wait?
If my position was there and now invested, still there is there, but I've freed my capital. But I think now, as per the next year projections, I think 700, 750 crores would be the profit, and as per that, 46 rupees would be the EPS. And I think at this current juncture of 1565 lower circuit, if I get it at say 1500 or 1450 level, I would definitely add into, because my projections are intact. And I don't foresee that there is any changes would be there, and we will have this final number in April also. So I think 1450, 1500 or 1550, one can start accumulating. Those who are not having it will definitely look into it. Already stock has corrected from 2000 level to now almost 25%. So what more anybody wants? So one should look at this number between 1400 to 1560 today. One can accumulate this company.
Okay, that's the view from IRCTC. By the way, not all mass gathering led stocks are doing badly. Phoenix Mills, which got punished and went below 800 rupees from above 900 rupees, has bounced back and it's up about 3.5% at 31 rupees 866. Frankly, I mean, you would presume that a mall business would get impacted as much as some of the others, maybe more so than a hotel business, but Phoenix Mills is actually weathering the storm better and coming out in the green. So do watch out for this one as well. Individually could be looking decent. For now, it's certainly looking very good. The volumes too, pretty decent. Okay, maybe it's a good time to get in a sense of what dealing rooms are recommending in the session today as well. If we can, we should go across to Darshan Mehta, who joins in with his channel checks. Darshan, what are you gathering from your sources? We are substantially off the day's low, at least for the Nifty and the Sensex.
Yeah, that is there, but you know, overall still there is panic. No one's taking aggressive positions at this point of time because we've seen how extremely volatile it's been. Some of the stocks has been spoken about. Jubilant Foodworks, it's corrected all the way from levels of close to 2000 to 1650 now. Now, basically, a lot of concerns are there. On one end, there is the Olympics that is being spoken about that would get cancelled, but the bigger trigger that's been spoken about, there's no official confirmation, but in case IPL gets cancelled, there could be big concerns because usually this is the time when the sales actually spike significantly. It's recovered from the day's low, but you know that concern and overhang will be there given the state of coronavirus. So but this is one counter that dealing rooms are actively watching out for. Bajaj Finance, some of the domestic funds have started accumulating. It's corrected all the way from levels of 4900, available at 4200, very close, or probably bounced back from the 100 DMA today. Technically, they believe that there could be a bounce back. So at low levels, there is accumulation that's happening in Bajaj Finance. And two stocks, again, concerns over the China market. Tata Motors obviously has corrected from levels of 200 on every flow. And if you saw the data that came out on Bloomberg today, 80% year-on-year drop for car sales in China. Tata Elxsi, a big supplier to automotives on Tata Motors also, and that too is taking a knock today. So these are some of the stocks that's been spoken about.
Okay, Darshan, thanks for bringing that dealing room check. We'll keep an eye on all these stocks. We were highlighting how the IT stocks have recovered. So TCS and Infosys are up and about, and they're contributing the most to the recovery, at least, that you've seen on Nifty. Look at that. TCS is now up about 2.5%, and while Infosys also has inched higher, that's seen gains of 1.7%. These are your heavyweights. Manav, would you take a bet on any of these two stocks, TCS or Infosys, on the charts, looking at the intraday recovery that we've seen?
See, that if you're looking at the chart of Infosys on a medium-term perspective, the stock has been in a sideways broader trading band, having the support at on the lower side close to the levels of 2000, and on the upside 2250 to 2300 is the broader range. So definitely the stock has seen a good amount of bounce from its important support and is also closing its falling gap pattern, which definitely confirms a short-term trend reversal. Also, looking at the broader perspective, the IT index is likely to continue its short-term outperformance. So TCS is very well placed. On the lower side, 2040, 2030 are the important support levels. One can place a stop loss at 2030 on the lower side and can expect a rally close to 2150. Looking at the chart for Infosys, the stock will continue to face series of resistance at the levels of 765 to 775. So if I have to pick one of these, then TCS is quite well placed and can see a good momentum rally.
Okay, I want to pull up SL Propack as well. In a weak market, the stock has been exhibiting some strength today. Look at that. It's up 9% yesterday. There was a coverage note from the brokerage house Motilal Oswal. They initiated the coverage with a buy rating with a target price of 210, indicating some 25% upside now, at least from the current levels. According to the report, they've stated they're embarking on a next growth trajectory, and also ramp up of operations and improvement in product mix could drive growth for the company. And even if you look at the financials of SL Propack, I think in the last 2 quarters, we've seen some margin improvement. They've been working on cost optimization as well. Yogesh, I'm not too sure if you track this company, but definitely last 1 year, 6 months, we've seen good returns. It operates out of, I think, various geographies too. Any impact on SL Propack in the current environment? And what are the growth prospects if you've been tracking this company?
Navneet, not looking into as detailed as you are mentioning, but overall, I have seen the growth rate for this company, where the business is commanding almost 40% market share overall into this business. And now I think around 16, 17 times P multiple, it is one of the mid-cap stock which is available at lucrative valuations. So probably that would have, along with the report which have been initiated today, so that is driving some volumes and interest into this. But definitely 140, 150 post the management change in last 8 to 9 months. From there, it has come into the limelight, and it has touched 220 recently, and then corrected to 150 or 150, 60 rupees. So that I think, yes, definitely it's a strong candidate over the business outlook. And the projections which are there for next year EPS would be around 11 to 12 rupees, and was available at 160, today maybe 175. So still it is just available at 18 times, less than 18 times P multiple.
All right, we were just talking about Varun Beverage. You should pull that stock up because it's seen a sharp fall since the last few minutes of trade. I think the stock's now down about closer to 5% quite a volatile session, the second half at least for Varun Beverages. Went down, tried to crawl back up, and now back at about 780 odd. Manav, do you track Varun Beverages?
Yes, we have seen a good amount of specific momentum coming to the stock, but overall there is no clarity as far as for looking at the medium term trend. So I sense the prices are definitely seeing some sort of a move from the current levels. There could be a short term move from the current zone for another 5 to 8%, but if given a choice, I would just want to avoid this stock and probably get into some other mid cap idea.
Okay. Let's get down to those closing strategies then. Manav, I'll keep it with you. One stock idea that you would like to go with in terms of buy today, sell tomorrow, or sell today, buy tomorrow idea?
Sure. In the current scenario, I'll go with a BTST, which is a buy on Pidilite. In fact, the stock has seen a good breakout from its falling trend line. The prices also witnessed a very shallow fall in the recent fall, and this breakout too has accompanied by good amount of volumes, and the prices have also exceeded its previous 4 trading sessions high. So it confirms for a good breakout momentum in such markets. Recommend a buy with a stop loss of 1545 on the lower side for an upside target of 1680.
Shrikant, what about you? Your closing idea?
Yeah, see, like the Nifty has formed higher bottom formation, and it reversed sharply from the day's lowest level. We were of the view that in case if we see the market is closing below 11,150, then it will be negative for the market. But market recovered nicely, and it is closing much higher from the day's lowest levels. At the same time, Bank Nifty is also closing at its day's highest level. So while looking at the pattern, I think we should look for adding those stocks which are part of index, like HDFC Limited. And today when the sell-off was there in the market, HDFC Limited was holding well above the mark of 2180. So HDFC Limited looks very strong bet to buy at current levels with a target of 2250, 2260 on the higher side. We can keep stop loss at 2180 on the downside. The other stock which we like from the cash segment is, which is part of FNO also, Muthoot Finance, which is currently trading around 672, 673. And there we feel that the stock has completed its correction at 855, and now again it is rebounding back to cross the levels of 900. So Muthoot Finance is also a buy at these price with a stop loss at 860, and we can again expect 890 or 900 on the higher side.
Okay, well, watch out for these names. Before we move any further, let's cut across to Finance Minister Nirmala Sitharaman. She's talking about some cabinet decisions, addressing the media about those.
72 changes to 65 sections, meaning for those 72 changes, we need to amend 65 sections of the Companies Act, which was passed in 2013. And all of you are quite aware, between 2013 and today, this particular act has gone through repeated, stakeholder consultation and also taking a lot of input and amending so that it results in greater ease for the companies which have to follow. So as a result, in this particular set of amendments, the priority is to decriminalize this act. So majority of what is being changed is to remove those particular sections or particular, technical requirements, all of which result in giving a criminality to the offense which may not be at all intended to be malified. So what we have done is 72 changes, all of which have been approved by the cabinet, which will result in amending 65 sections. The major thrust, of course, is looking at ease of doing business and decriminalizing. So what is being proposed is as follows. We'll recategorize 23 offenses out of 66 compoundable offenses under the Act. There are 66 compoundable offenses, of which 23 will get recategorized, and they will be dealt with an in-house adjudicating framework. So of the 66 compoundable offenses, 23 will be recategorized, and they will now be capable of being handled within an in-house framework which can adjudicate on the matter. Second, we are omitting 7 compoundable offenses altogether.
All right, that's of course Finance Minister Nirmala Sitharaman. Just before 3.5 minutes left for the markets to shut shop, I must say one of the strong hands helping the markets is also Reliance Industries. It's in the green, a bit of a spike in the last 20 odd minutes, about 0.34% higher. Quick thoughts here, Manav. Reliance Industries, 1347.
Yes, in fact, the stock has formed a bullish hammer pattern today on the daily charts. A sharp recovery from the intraday lows, and the prices are now closing above yesterday's close. So it definitely indicates at least a short-term bottom in making. And Neeraj, at the start of the show, I did mention, the prices are, the index are trying to show some sort of a panic bottom lows, looking at the VIX chart and other things. So most of the large cap indices are recovering very sharply from its lows. So now today's lows would act as a very key pivot level. So even for the Reliance, the lows of 1300 would be the key pivot going forward. And as long as this lows hold, we can expect a short-term recovery. For Reliance on the upside, 1400 could be the immediate targets.
Okay, and there's some news flow around Bharti Airtel as well. Keep that stock at the back of your mind. I think Bharti has paid about 18,000 crores, but the courts apparently have asked Bharti to pay the past dues as per the court order, which is about 36,000 crores. I don't know if the stock will take that well. We'll talk about that. But the markets, let's start wrapping them up, about 2% lower. The bank Nifty, that is the principal culprit. The Nifty 50 about 0.5% lower. I don't know if Reliance Industries was actually rising as a result of that announcement. The mid cap and the small cap indices should also come up on your screen. A bit of pain today, about 2% lower for the small caps. What about the large caps though, and how have they moved? Let's point out some names. So Pharma, clearly at the top of the grid. Cipla, Dr. Reddy's, Sun Pharma, all of them active. Power Grid, second day on a trot, it's gained. TCS and Tech Mahindra too. So that shows that the gains that we've had in IT, and well, if wishes were horses, people were hoping for some bit of course correction in stocks like M&M, and they've done that today, up about 1.5%. But look at the losers. iShares corrects after a number of days of gains. Yes Bank, of course, stays in pain, but Bajaj Finance, IndusInd Bank, HDFC Bank, those two have clearly corrected quite strongly in the session today. Tata Motors continues to grind lower. At a point of time, though, was down about 7%, ending just about 3% lower. And BPCL has some losses, about 2.3% in the red. But that's the nature of the large caps. The mid caps, Navneet, a lot of pain in the session today.
That's right, Neeraj. I think the only sigh of relief is that we're closing off the day's low. I think for Nifty, at least, we respected yesterday's low and we bounced back. Let me still begin with a couple of gainers. BASF, a specialty chemical MNC company, which has been moving higher. So in today's trade as well, that's closing with gains of 13%. Then you had something like 3M India, another MNC, which was up and about in today's session, up about 7%. SL Propack, we discussed the stock on the show as well. I think Motilal initiated coverage yesterday. The stock's up about 8%. Pidilite is the other one, which was up and about in a weak market like today. So that's also closing, by the way, around the day's high, which technically is viewed as a positive sign. An interesting takeaway, Dabur, markets have corrected so much, but this one's still trading around its 52-week high levels of 523. So 515 for the stock today. Also, it was quite, showing strength in today's trade. So that was up about closer to 2%. And Glenmark, Pharma Pack, of course, has been doing well. So Glenmark among the mid-cap companies was up and about. On the losing side, you had Shriram Transport, which was your top F&O loser also for the day, down 7%. Motherson Sumi, the relentless fall continues. I think today it became a double-digit company once again, though it's closing at levels of 100 rupees. Ashok Leyland was weak. IRCTC was locked in lower circuit, cuts of 10% seen here. And you had something like Apex Frozen Foods, which was down 9%, and the fall for PVR continues in today's session as well. PVR, I think, was down about nearly 4.5% to 5% in trade, Davina.
All right, so that's what you've got. Not a bad close in terms of if you were to look at the intraday moves, and then from there the pickup, and thanks to Reliance Industries, that's aided the index. But the Nifty Bank itself too has rebounded from the lows of the day. It was down at one point almost about 3.3%. From there, a closing of about 540 points lower. This Nifty closes above 11,252. This is the LTP. We'll wait to see what the closing turns out to be. But individual stock contributions, they'll come up on your screens. TCS, Infosys, the big moves that you've seen in some of these defensive names. HDFC Limited, quite contrary to what HDFC Bank has been doing, is supporting. Losing out is HDFC Bank, like I said, they're down about 36 points today. ICICI Bank and Bajaj Finance too look really weak.
All right, so those are your Nifty contributors. Well, the broader markets underperformed the frontline indices. Let's take a look at the market breadth. And of course, it was in favor of the declines. The ratio is almost 1:4 that we're seeing. Volatility index should also come up on your screen. So that's just about closing at levels of 24.3. These are still elevated levels.
All right, and the turnover, that's the last element that we need to see, 46,200. I think this last entire week, this has probably become the new norm, where you've seen levels of 43,000 plus for the cash market turnover. The BSE cash number doesn't seem right. And NSE F&O, about 19.5 lakh crores in terms of the turnover. But a quick closing comments. Manav, come to you first.
Yes, we have seen a good amount of recovery in both the indices, and Nifty has managed to close above its yesterday's low. In fact, the closing also confirms for hammer formation. So we could see a short-term consolidation, at least on the immediate basis today. I think that the markets have made the panic low. The kind of the volatility surge that was witnessed in around 1:32 p.m. There was a good amount of recovery from its important lows, and looking at the momentum indicators and the divergence, I sense from this deep oversold levels the market could probably consolidate. Once the Nifty starts exceeding above 11,300 is when you can see a short-term momentum rally and short covering at least coming into the Nifty index. For the Bank Nifty, we have already seen a good amount of put writing also at the strikes of 27,500 and 27,800 levels. So those strikes have also seen a good amount of build up, which further confirms at least for the short term basis. On the upside, Bank Nifty needs to close above 29,000, whereby we could see a good recovery coming for the near term. So today's lows should ideally act as an important pivot point for the markets, and only closing below today's lows would further hamper the structure. For me, from now I would be quite selective for going longs into the markets, and I think this market could eventually start moving higher, at least for next couple of weeks.
Yep, but still can't say. It all depends on what the rest of the globe does. Shrikant, what about you? Your closing thoughts?
Yeah, see the market closed above the mark of 11,150, which is positive, but at the same time it is crucial for the market to cross the level of 11,350. So tomorrow, in case if we see the market is crossing 11,350, then it will have a lot of positive impact on the market. In that case, we may even see the levels of 11,500 on the higher side, because the next level to watch out for is between those levels only. So it is mandatory for the market to cross the level of 11,350. Based on today's close, certainly we should look for adding some long positions with a stop loss below 11,200.
Okay. Gentlemen, we leave it at that. Thank you very much, Manav as well as Shrikant. Before we wrap, just a quick glance at the print of Europe right now and how Dow futures are stacking up. So at least the European indices right now are in ship shape. You've got about a percent and a quarter gains coming about for the likes of FTSE, CAC and DAX. Dow futures is up about 2%, so that's a strong indication of what you can expect from the US equity markets. But we have to wait and watch. On that note, it's a goodbye from Neeraj, Navneet, myself and the entire team that's put this show together. Thank you so much for watching.